Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss as we close out this current week and look forward to the new trading week starting October 9, 2023. I'm going to look at the 4-hour chart in this currency pair, and what we see here over the last 2 weeks have been a move higher, move lower, move higher, move lower. Today's low took out the low from, well, not quite the low from last week. In fact, it pretty much retraced the entire move, maybe just a little bit short. I think this is a low price from the previous week. Nevertheless, you get the point of the up and down. And in trading here today, the price did move below a key swing area on this 4-hour chart. You have to go back to this period right through here where the market formed this ceiling before moving to the downside, and we returned to that ceiling all the way until it took us all the way till last week when the price finally moved to this area and then found support against this yellow area and moved to the upside. And trading at the end of last week, the price did break back below that yellow area, only to close higher, and that set the stage for Monday's low price this week, falling into the swing area and finding again support buyers against this level, pushing the price to the new high. Now, toward the end of yesterday's trade, the price came to the high of this swing area. By the way, this comes between 0.91069 and 0.9118, but the price came toward the high of that area and found support buyers, and it wasn't until after the dollar selling and trading here today that we started to see increased selling to the downside in this currency pair, and that selling has taken the price to two different technical levels. One is to the 100-hour moving average. That's the blue line in this chart. That level comes in at 0.9088. The second one was the 50% retracement. Now I put the retracement from this low right here. Why? Because this area right through here, the market was going sideways over a number of about a week and a half of trading before breaking to the upside and basing against this level and moving higher. Maybe it's a 2-week period through here. So we'll start from here to here, and the 50% retracement came in at 0.90694, and that area is going to this area between the 100-hour moving average and the 50% retracement is going to be our key barometer for trading next week. If the price can move below that area, that would open the door for a retest of the 100-day moving average. That's this green line right through here. It also would retest a 61.8% retracement of the same move higher from this low here to the high price that we saw right here. So this area right through here would be another key target on the downside near the 0.9028 level. Get below that level and we start to look toward the 200-hour moving average. So the price to the downside, we need to get below the 50%, to get below the 200-day, get below the 200-bar moving average of the 4-hour chart to open the door for further downside. Now, if the price were to move back above this 100, or stay above this 100-hour moving average, or just above it, and get above the swing area right here, then things would open up the door for further upside momentum. The break below the 100, the test of the 50% retracement would all have held, and traders would start to look back toward the upside. But it's looking a little bit more favorable to the downside here in the short term, at least. The buyers had their shot to take the price to new highs this week. They failed. The buyers had their shot to hold support against this old swing level. They failed. So that means give the sellers a shot, and we'll see how far they can go with it. So there's a technical look at the dollar versus Swiss. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.